Hi, today I'm in the offices of Ryecroft Glenton in Jesmond, and I am here for the next episode of the Dynamic Duos of Bradley O'Marney podcast. And the podcast really explores the role of advisors and their unique ways of working with organisations. So we've had non-executive directors on the podcast. We've also had chairs. And today we've got Carl Swansbury, who is corporate finance partner at Ryecroft Glenton, and Mark Lazenby, corporate partner at Square One Law. So I think first of all, Carl, can you just tell us a little bit about yourself and your role at Ryecroft Glenton, please?
Of course I can. And first of all, massive thanks for asking me to feature on your podcast. It's not very often I'm a guest on a podcast. I'm normally in your seat, so I'm excited and nervous to be here.
I'll ask some firing questions, Carl.
Oh, I expect nothing less. So in terms of my background, so I'm a qualified chartered accountant. I qualified with PwC and I joined RG 13 years ago, can you believe, to set up RG Corporate Finance. RG Corporate Finance now is the largest corporate finance boutique in the region, advising not only businesses but also management teams on all aspects of growth, change and transformation. Ultimately, we find ourselves advising on transactions that sees a change in ownership. So that can be acquisitions, disposals, MBOs, MBIs and fundraising.
Excellent, thank you. And Mark, can you tell us a little bit about your role at Square One Law?
Yep, certainly. I'm a corporate partner there. I've been there for 12 years. I think I was number 14 or so when it started, because the firm's been going about 13 years. I head up the corporate team. We advise clients throughout the country, but have a northeast dominance on all forms of corporate transactions, very similar to Carl in many ways. So buy, sells, finance raises. We also do some non-transactional items, restructurings, just share allotments, that sort of thing.
And how did you both meet then? Tell us about that.
We actually met when Mark had joined Square One Law to develop the firm and the corporate capability of Square One Law. And I think actually the first time we met was when we had the pleasure of advising on the sale of Integral Search and Selection to Manpower. I was corporate finance advisor and I introduced the shareholders of Integral to Square One Law.
And what are your favourite projects that you've worked on together?
Oh, favourite.
Wow, favourite. I don't think I've ever classified favourite project.
Definitely, I would say, in terms of, from my perspective, whilst Mark gives that thought, I think a notable transaction that our firms have worked on together recently in region that has been disclosed was the sale of RHI Irving, which is a large business headquartered in Hexham, privately owned, which myself, Mark and Mark's firm advised on the sale of to Mighty PLC for 19 million, which was a significant regional transaction which our firms were able to advise on side by side.
So how much preparation goes into that from your sides then? So what's going on behind the scenes?
Behind the scenes in terms of advising the clients?
When you're advising the clients, so what's the preparation?
Well, I think the prep. I don't think there's preparation in getting to know the clients and exactly what they want, because different client profiles need different assistance, and there's more to it than the technical professional services. Lots of people, or lawyers, or accountants, or CF advisors, to make a difference, you need a bit more, and you've got to get underneath the skin of your clients and know what they need to help them succeed. So it's building that relationship. It's spending the time and understanding what tactics you need, what you need to concentrate on, dealing with issues before the other side even know they were issues. So it's all about understanding your client and doing more than the documentation or the modeling, because that's sort of a given. You need to do a bit more to make a difference for your client.
And the extra mile.
Yeah.
I think that's right, Mark. And I think particularly with RHI Irving, we were engaged before Square One Law, which is quite typical actually. So when advising shareholders on the sale of a business area, it is often that corporate finance will be appointed first, because actually legal advice typically only becomes incredibly essential at heads of term and as you look toward the execution phase of a transaction. So when we were engaged, actually a large amount of our time was spent not only helping the business prepare for due diligence, helping the business appreciate where buyers would see value in their business so that those areas could be emphasized. But also, actually, a lot of our time was spent identifying who the right parties would be for us to approach when we took the business to market.
If shareholders are looking to potentially sell a business as well, at what point should you both be brought into this?
Yeah, so I think from a corporate finance perspective, the right time to start talking to shareholders about their plans and aspirations for the business and for themselves as shareholders is yesterday. Because if we know that the shareholders are looking to scale a business that will be sold for 100 million, knowing that now is really helpful because we can explain what needs to be done to improve the earnings profile and in turn the enterprise and equity value of the business to deliver the exit that the shareholders want to achieve. And a lot of the advice we give needs to be given many years prior to there being a transaction. So as an example, currently there's something called business asset disposal relief, which means when you sell shares in a trading business, as long as you qualify for the relief, your first £1 million of proceeds is subject to CGT at 10%. But you have to have held the shares for 2 years.
Yeah.
So clearly, if you've got a business with one shareholder and he or she has a spouse, transferring shares to his or her spouse 2 years prior to sale is a good thing because both will benefit from business asset disposal relief. But you have to have done that 2 years prior to the sale. And that's one example of many things that are very time sensitive. So from a CF perspective, the sooner we are engaged, the more notable the impact of our advice is. And I can only assume, Mark, your view is sort of similar, but for different reasons.
I think that's absolutely right. I think from a legal perspective, it's all about presentation in the early stages because what you have to do is present the most organised, the most compliant business that you can. So if we're selling, what our role is in reality is to protect the value that we think we've achieved at head stage.
Okay.
And to do that, it has to look as good as the cover.
Yeah.
If you present somebody with a chaotic business, they will immediately start looking for things. If you present them with a very well-ordered, managed, compliant business, they take a different view and the process is easier. So I think it's always in these things, always the earlier the better.
Yeah.
But it's very hard to crystal ball gaze and say, well, I'll need to be in then. But if a business has had investment, you'll find before they go to an exit, you'll find it's a different process anyway because those investors are thinking about exit before the founders are. Yeah. In many cases.
Agreed.
If it's a typical Northeast family-owned business, they'll be thinking about their family and their staff and what's going to happen with their legacy often before they're thinking about the value. It's a real mix of emotions, and that's one of the things that we have to help people with. Yeah. If it's a family business, it's hugely emotive.
It is.
Yeah.
Because they've got to do right by their family, but right by their people.
So how do you manage that with your team then, in terms of, I guess, the emotional side?
We're very upfront with people and we'll say to them that this is one of the hardest things they'll ever done if they're selling a family business because of the emotion. It is not. People don't use lawyers, generally. They buy a house, but it's transactional. There's little unless the buyer comes around and doesn't like your house, then that becomes right emotive. But for a business, it's critical though. People feel it a personal criticism when they say, "I wouldn't have done that in your business." Yeah. So it's almost there is a process to go through, and we will get there. And our job is to explain what's normal. Mm-hmm. It is normal for it to be really tough. Yeah. Well, on a family emotive sale.
Yeah, well, obviously I work within a family business and I always think of it as an extension of, well, me, it's like my other baby.
Yes.
It's ingrained.
That's always the case, isn't it? For any owner manager who has invested a huge amount of their life in their business. And you've got to know that. Yeah. You have to respect that. But then you do need to remember that you're being engaged to provide advice, and sometimes the best advice is the hardest advice to deliver. So, it's pretty common, Sarah, that when I meet with shareholders for the first time, I'll spend a lot of time, like Mark said, getting to know their business. I'll then want to understand what they want to achieve from their business. And sometimes you've got to reconcile the fact that their aspiration to perhaps build a business that will be sold for a particular amount is only going to be achieved if the business significantly changes, whether that means there are deficiencies that need to be addressed, whether it means they need to scale the business so that it has more value attaching. And, you know, good advisors are willing and have the, I guess, ability to convey those difficult messages, but in a way in which, you know, the client will respect and appreciate. I mean, I guess the one great thing about Mark and I is we both are owners of our businesses, and we both are, therefore, very similar to our clients in that we are owners, we make difficult decisions, we're running our own businesses, so we can not only empathize, but really understand some of the emotive aspects that our clients are having to grapple with.
And a lot of the things that come out there are to do with people. Yeah. Because you're more successful if you try and recruit better people than you are and you have. You should, that's how you should always work. That's quite a hard message for an owner and a family owner to hear, that the family needs to, you know, skill up, effectively. But often, but it's supplementing what they deliver.
That's right.
You know, that's an example of a difficult message, but that can have a transformative effect on businesses just by having another person's perspective.
And of course, don't forget, again, sometimes the best way to deliver a message is to deliver it indirectly. So by that I mean, in a family-owned business, sometimes, you know, the children who have been tasked with running the business are the single reason why the business is not being successful. Saying that perhaps isn't, you know, that great a message to convey. So perhaps the right way to approach the same subject is to explain that for the business to be saleable, there has to be an employed SMT in the business that perhaps are separate from the shareholder group, so that post-sale, the buyer can rest upon that employed SMT to continue to run the business. And therefore, it's perhaps not in the shareholders' best interest to have their children whom are not experienced C-suite executives running this business. In fact, sometimes that has a different impact on the recipient of the message versus saying that the children are not competent or don't have the skills to run this business.
But the business is more than the family name. It's that sort of, how do we develop and improve? It's all of that. We could take this problem away from them.
That's right.
Achieve a similar result.
Thankfully not the case at Bradley O'Marney.
Well, I mean, that's an assumption we had, but we appreciate the statement made. And we talked about RHI Irving earlier, which is a business we advised on the sale of, and that's one piece that the founder, controlling shareholder, got right. Over a very prolonged period of time, he recruited a team of 7 into the business, very experienced individuals, all had EMI share options, and therefore actually Gavin, founder, was able to sell the business and step away because the management team to this day still run that business. And that was with one eye on a transaction.
So when comparing a trade deal to an MBO, what needs to be considered?
A lot of my answers are going to be people. If someone's buying you, rather than you looking to just get funding to run your business, someone coming in will have more, a bigger set of people to help supplement the management. If you're going to do an MBO, you really need quality management. The biggest reason MBOs would fail, in my view, is inexperienced management team, or the management team just not understanding what management is really about. It's a huge step up for people. And if you don't have a strong chair or a strong mentor in an MBO, you're going to find it a really tough time in the first period after closing a deal. On a trade deal, they normally have that on tap because they're seeing the business and they think, I've got people that can run this in a way and help improve that. Whereas a funder's basically investing in the management team. They'll see the business fundamentals, but they have to invest in the people because the culture, the people, that is so incredibly important in businesses. I mean, you, I guess, see that even more than I will. But.
No, I agree wholeheartedly with that, Mark. I think the only other things, Sarah, I'd say are really important when considering a sale of a business to a trade buyer or a management team who are running the business are twofold. First of all, I guess when selling to a trade buyer, you can perhaps assume, it's not always the case, but you can perhaps assume that a trade buyer will see strategic value in acquiring the business, so they may pay more for the business than an employed management team might. Not always true, but often that is the case. I think similarly, you may assume that with a trade buyer, they might want to integrate the business they are buying, and that can often mean things like a change in the name of the business they are acquiring. It might mean certain costs are taken out of the business they are acquiring, and those costs can be wages and salaries costs. So people may be made redundant as a consequence. So actually, a trade buyer acquiring a business can mean the legacy is changing, whereas in an MBO situation, often a change in name, taking out overhead is less relevant because actually that business has to continue to run autonomously. So I do think those are some of the things that can be really important to founders who actually really want to see the business go on to succeed independently, not part of a PLC.
Yeah.
I think that's absolutely right. I think founders would also see, if it's a legacy business, certainly a family business, they see one's more inherently risky than another to their business.
That's right.
So that's why the strength of the MBO team, if you do an MBO, they have to have a lot of faith in it. But yeah, absolutely. I mean, there's so many different considerations, but a lot of this is about fit. Yeah. People often want to do the right thing for the business, for their people. You'll think, a lot of people think it's always only about price. There's so many other factors.
So what's the most challenging project that you've worked on then?
Oh, the most challenging project.
You might not be able to name it, but...
We could perhaps anonymously talk about a particular corporate carve-out, which was an MBO transaction. I think that was a fascinatingly interesting and challenging transaction, Mark, if that's
it was
one worth referencing.
I mean, so we were involved together on a transaction where we were effectively providing a solution to a very large international corporate, which involved a management buyout situation. Because of the makeup of the deal, unusually we were providing a lot of solutions to problems that the selling entity didn't know it had. And that makes it very difficult because they're the ones with all the knowledge. Yeah. But because it was such a large organization, the entity had the knowledge, but the people we're dealing with didn't have the knowledge. It was so multi-tiered on getting to where you need to structure it, wasn't it?
I agree. That was a really complex transaction, which required a lot because it was, as Mark said, a team of employees who ran part of this business buying the business from a big corporate. Okay. And actually, I think the thing that perhaps was most interesting there is the point you made around management, because there was a very good team of individuals who were running that part of the business, but perhaps that management team wasn't complete. They hadn't together previously worked as an ownership team running a business, and I think that showed, didn't it? Because what they were a collection of very experienced employees who hadn't worked together as owners of a business, and I do think that showed.
They'd worked in big business.
That's right.
And they were about to take it in. Absolutely.
That's right. I think for an MBO to be successful, the management team have to have the ability to very quickly transition from employee to employer. And that's not just in title, it's in the accountability and responsibility they take for the business and the people within it.
And what are your favourite deals that you've worked on? Is it an MBO? Is it a trade deal? What's your...
I think favourite's always quite difficult because the enjoyment I get out of transaction is the effect it has on the people. So you can do very large deals and acting for a listed business, and the effect it has on those people in reality is they get a bonus. Yeah. But that's their job to sell. If you do a deal where it changes the family, it absolutely... I mean, I've done transactions where it has been a single generation business, but they dispose from it. So father created it, and then father and his children dispose of it. But 30 years later, and it's his life's work, and they change the dynamic of their family forevermore. That is much more enjoyable. They're more fun because there's normally the clients are generally got some good stories about what goes on. That makes it better. It's the personal thing.
Yeah,
if it's just I've got 20 deals on at the moment and you're one of them. That has much less of a personal effect or enjoyment. You might get more satisfaction for doing the deal, but they're different measures. Yeah. But from an enjoyment and favourite, it would always be one of the owner-managed businesses, because there's always something comes out, isn't there?
I absolutely agree with Mark. I mean, our focus within RG is advising privately owned businesses. So most of the time, our client will be the shareholders, and they will be individuals. And often when we're advising on the sale of a business, Sarah, this will be the first time these shareholders have sold a business and therefore received this amount of capital wealth. And as Mark said, I take a huge amount of pride and pleasure in allowing people to realise often their life's work. I mean, probably 70% of the transactions we advise on will be selling the only business that a shareholder group have, and it will be a business they have spent literally 30, 40, 50 years building. So for me, that's what makes what we do genuinely not only fascinating, but it's what motivates me to want to do what I do. The idea of transacting in a corporate environment whereby your client is only ever employees of a listed company doesn't excite me, speaking candidly.
And how does it benefit your mutual client that, you've both got a good working relationship?
I think anything where advisors that sit alongside each other and sort of know how things will work, they don't have to work in tandem. You just got to know who will take the lead on something, or because actually deals are about negotiation, and you need to play different roles. And you sometimes need one person to go off knowing that the end result is for someone else to get the deal over here. But so knowing people's styles and knowing how to get the best out, I think is crucially important, because if you don't have that relationship, you start a deal getting to know how the other person works.
That's right.
And that can take quite a long time.
Yeah, and it can be inefficient from a cost and time perspective, from the client's perspective, right? So I think, just to add to what Mark said, Sarah, I think the reason it's brilliant when we are advising on a transaction is because Mark and I know where our strengths and skills lie. We'll play those off one another. We know that our teams are capable, incredibly well resourced, and therefore actually will deliver the right advice at pace, which is often required. And I think finally, actually, I think because we have such a good relationship, communications are easy.
Absolutely.
Because sometimes you've got to be able to have a very straightforward conversation, and therefore, because we've transacted so often, I can call Mark and we can say, right, this is the issue, how we're going to deal with it. If I didn't have that relationship, perhaps that wouldn't be as possible, which creates inefficiency in a transactional process for the client.
And plans moving forward for both Ryecroft Glenton and Square One Law. So how are you going to scale your own businesses?
For us, comes down to people. Again, we started in Jesmond. We took a number of decisions what people may think are a little strange. So when Boris locked us down, we signed our new lease the day of lockdown in Leeds.
So what made you do that then?
Opportunity.
Okay.
And I think this is where we can add a lot to clients, is we can make decisions where as business owners, we're saying, yes, we'd like to do that. We had an opportunity to attract some people who wanted to work in the same way we did, but they wanted someone to back them. So we went in and did that. That started our Leeds office. We've always had a small presence in Tees Valley. We're now looking to build on that because, again, we've had some opportunity where we can get people locally who have the contact and the networks, and we want to build on that. So our next stages are building on and finding the right people out of Leeds, continuing in Newcastle, because that's always been our home, but also out of Tees Valley.
And over to you, Carl, how are you planning to scale Ryecroft Glenton?
Sure. So to be fair, very similar, Sarah, to Mark. I mean, any professional services business is only as good as the people that it employs. So we are going to continue to scale both here in the region. We are opening our York office next month, which is really exciting. And that will allow us to spend more time working with clients in Leeds, Yorkshire, Teesside and Humberside. In terms of RG, I mean, we're now a sort of 124-year-old firm. We have about 140 employees and 12 partners. So actually our intention is to continue to scale, and our objective is to be the leading independent full-service advisory firm. And we think we're close to achieving that.
I'm sure you are. And also, just sort of stripping back the corporate images here. So what do you both like doing outside of work? Carl, any world records? Any?
Ooh, okay. So world record. So I don't have a world record. What I can say is I was one of the youngest qualified chartered accountants
Brilliant.
in the UK, which is not a world record, but hey, it's
Good
it's something
achievement,
that I worked hard to achieve, so I feel proud of that. In terms of what I get up to outside of business, so as you know, we've got a beautiful 7-year-old daughter, so she keeps me on my toes. I'm an avid Sunderland fan, which creates more misery than excitement at this current time, but nonetheless, I do like to follow Sunderland at home and away. And actually, genuinely, the one thing I probably spend too much of my time doing is just actually spending time with family and friends, because for me, actually, that's where I get most enjoyment.
What about you, Mark?
Yeah, I could say very similar, other than the team, because I am certainly not a Sunderland fan.
You're Newcastle.
I am a Newcastle fan. Yeah. I've got 2 young boys, one of which comes to me with the football, and other than that, it's doing stuff with them, whether it's all their activities, their sport, their cricket, their taxi driver for everyone, Berwick, York, wherever we go on a Sunday.
Monday, isn't it?
So it's all about the family.
Brilliant. Well, thank you both very much. Carl, you've been on the phone every week trying to get onto my podcast, and here you are.
Well, I mean, I'm going to say that's slightly different to what you suggested. I've given in to your demands, but it's been a pleasure.
Yeah, thank you very much. Thank you.